Welcome back. You're still with Art Wise on our first episode and conversation yet with Renu, Alok and Rajiv getting their thoughts on how to approach investing in the art market. Renu, I was reading a report that said that the Indian market is just about 0.5% of the global art market. Does that perhaps give us a significant opportunity to up the scales? Is there enough appetite, you think, in the Indian art market, or is it just too expensive a proposition?
No, I don't think I think it's a very good proposition. And if you really look at the total art market, we are just minuscule. You forget US and UK where the systems are in place, collectors are in place. Let's compare India with China. And like Chinese art started with the non-Chinese buying art, and now it's such a strong homegrown market that there's amazing Chinese collectors buying Chinese art like crazy, which is missing in India. And that's where the GDP which they are saying coming year it will be around 9%, and the HNWI population also increasing, India getting so many more billionaires. I really feel it's a great to increase the art market or to grow the art market, we have great possibilities.
Okay, on that note, in fact, let's take a look at a story which is along similar lines, which does talk about the Indian art market being a great opportunity.
Thanks to a string of successes in global auctions, the Indian artists are no longer seen as second to their European or Chinese counterparts. But still, Indian art accounts for a negligible share of the global market. Experts hold that with India projected to emerge as the world's second largest economy in the coming decade, and with rising appetite for arts among the new buyers, the true potential of Indian art is waiting to be unlocked.
Now, looking into the global international market, the total market is 50 billion. We are also less than 0.5% of that. So it is grossly undervalued. If you look into the national heritage all across the globe, there also the range is 100 to 150 million, and we have only reached 0.5, half a million, US dollars. Let's look at the top 10 paintings in the global international scenario. They are in the range of 100 to 150 million, right? And our highest top 5 are in the range of 0.5 to 3.5 million. So the difference in the evaluation is they are 50 times costlier than us. But I think things are going to change now. The way like Open has started its global art movement, we're launching this $250 million. There are many more people who have started understanding that Indian art is an opportunity. It is grossly undervalued. But it's not only undervalued, it's an opportunity today, and that is why the interest is generating.
Alok, listening to what Ajay Seth and Renu Modi mentioned earlier about the Indian art being undervalued, these records that have been broken in 2010, 2 records by S.H. Raza and Bharti Kher, do you think that's something that's just happened, or is it really a sign of green shoots? Do we really take it as a sign of green shoots?
I think it's an interesting benchmark to have, because it shows that the Indian art market is now starting to actually become more organized. And there's a lot more active buyer interest from people such as myself and others who earlier did not have the opportunity or the means or the knowledge to invest into art, even if we wanted to. And thanks to investors and firms such as Kopal, where they've brought and broadened that market and made it more accessible to the common man or the layman who did not have anything other to go by except for media reports or read in international magazines about Indian artists being auctioned at Sotheby's Christie's in London, New York, wherever else. So I think this opening up of the market in itself has exposed Indian art and has kind of started to unlock its value, if I may.
Rajiv, let's get a thought in from you. You were talking about art funds. You were sounding a bit skeptical about it. Is that the right way to do it? Or perhaps you just go to a gallery, identify a painting, and perhaps look at it with the prospect of it appreciating? I mean, it's if I was to draw a parallel to equity markets, say, instead of directly buying a share, do you perhaps choose the mutual fund route? What's probably a more prudent way about going about the entire process?
If you are investing in art, you should not treat it as a surplus that you have put in and you want to make real big time money out of it. A little bit of love for art also has to be there. That's what I've learned over the last 2 years. It started a different way, but now I feel that it should adorn the walls of your house or your office. And to that extent, maybe if you can own a piece of art, it is better. Otherwise, you are investing in an art fund and you take your chance like you do with a mutual fund. Of course, art as an investment is a little different from investing in stocks and real estate, in the sense that playing field is not as level as it is with mutual funds. There are concerns of investors in terms of liquidity, there are concerns of taxation, there are concerns of valuation, there are concerns of authenticity, which need to be addressed. And for that we need an environment, we need advisors. Every auction today means 20% buyer's premium, which is a lot, on which you pay VAT and then you pay service tax. So the transaction costs need to come down drastically if this market has to grow. And for that, the government has to intervene, and people like Kopal have to start influencing the government.
Right. On that note, we're going to take a short break. After the break, we're going to discuss a bit on what role the government should play here. Stay with us.
Welcome back. You're still with Artwise, still in conversation with Ranjiv, Alok and Renu, getting their thoughts on investing in art. Renu, what kind of a role do you see the government playing in perhaps enhancing the platform for investing in art, either by way of policy, regulation, education, any of that?
In India, whatever contemporary art, wherever it has reached, it's all reached because of private participation, private sponsorship, like private galleries, and now these funds and auction houses coming in. Government really has played very little to it. The government needs to play a more important part, and because art in any country, whether when you talk of investments, you need to have the infrastructure, the base, the foundation very strong, which we just don't have. And when we look at China being the third most, a country which has the third largest pie in the art market, India doesn't, because of the Chinese the government policies. We do not have any policies. The custom duties, the VAT, the Antiquities Act, the tax exemptions, and especially when like the Tagores which were auctioned recently in Sotheby's, I mean the West Bengal government made such a hue and cry. But really, if any private collectors would get more, more inspired or more encouraged to get art from or buy into these auctions, these very rare treasures of our country, and get it back if the government removes the duties. And I think we just cannot completely rely upon the government. It has to be government and private both together. Even the private corporate sector is sleeping over this whole thing.
I'm going to bring in Alok here. The government steps in here, and we have a broad policy in place. That's going to also help in regulating the market, the art market, and bringing in transparency.
I think the issue which comes around with regards to transparency is key to developing this market and making it more accessible and more attractive to investors. Unlike, as again Renu also mentioned, if you wish to have a broader participation, then you have to make it more attractive and appealing to everyone. And the only way to do it is to have it in some sense regulated, in some sense have it a stable, understandable process, and not an ambiguous process where people can go to an art gallery and buy something and find out possibly it's half the value of what it is, or maybe even a fake.
Right.
So, authenticity, transparency, a clear and a level playing field are key to making art more attractive to the average investor. So I think it's key and essential for the government to come in and possibly there was some talk earlier on for regulators to come in and monitor at least art funds.
Right.
But I think it would be a step in the right direction to have a broad platform and a broad canvas, so to speak, within which all the players can then fit in.
Right.
I think he's raised a very important point about forgery and perhaps duplication. I think that's something we're going to focus on further episodes as well, but it's perhaps a very important point that he brings up.
Right. Ranjiv, I'd like to get in your view on this and what Alok was mentioning as a fresh buyer who just stepped in 2008. How has your experience been with paperwork, having authentication certificates in place, provenance in place?
Kopal is good in that respect that you do get an authentication certificate signed by them. I think let's look at it in a country where only about 3 to 4% of the surplus money is invested into equity. Well, art has a long way to go in terms of tapping market money to really grow. But maybe it'll accelerate much further than the equities have in the last 10 years.
I have a very quick final thought. Since he brought up surplus money, if you were looking at a portfolio allocation today, if you were a high middle class person or an HNI getting into art, how much of your portfolio should you dedicate to art if you have that surplus fund?
I think it would be at least worthwhile for an investor to dedicate between 5 and 10% of one's portfolio into art. No more than that, because for the time being it's difficult to identify as well as have liquidity in that investment of art if you were to so require. So I think about 5 to 10% would be a fairly good allocation to start with for now.
Fantastic.
Okay.
Alok, Ranjiv, and Renu, thank you so much for taking time out and joining us. That's not a bad start. 5 to 10% if you have the extra money.
Absolutely. 5 to 10% is decent.
I would hope so. That's episode 1 then on Artwise. There's lots more to talk about in our subsequent episodes as well. But if you have joined us from the entire team here at Artwise, thank you so much for watching. Goodbye.
Goodbye.